Hello everybody, this is the part 3 of solving the exam kit of Kaplan Business and Technology F1 ACCA. In the part 1 and part 2, we saw these following chapters. If you haven't solved these chapters yet, the link of those videos, part 1 and part 2 of the exam kit is given in the description box below. Make sure that you watch them and solve these chapters first, and then you can watch this video and solve the further chapters. Also, if you want to watch the study text explanation videos, that is also given in the playlist below. So in this part of the video, we will be solving governance and social responsibility in business, law and regulation governing accounting, accounting and finance functions, financial systems and procedures, the relationship of accounting with other business functions, and audit and financial control. So we'll be doing these, and in the further 2 videos we will be completing the entire exam kit. So let's start with governance and social responsibility in business. Professional ethics. Okay, so just ignore the answers I have marked and try to do it yourself. Let's see if the answers I have marked from before are correct or no. Where there are a large number of external stakeholders who play no role in the day-to-day running of the company, there is a situation described as. So we have a large number of external shareholders, but they play no role in the day-to-day operation. So what does that mean? Detached corporate ownership, uninvited external ownership, dividend-based shareholding, separation of ownership and control. So the reasons for the separation and ownership of control include the suggestion that specialist management can run the business than those who can own the business. So this is clearly an example of separation of the people who own the business and the people who run the business. They are separate. The agency problem. So what is the meaning of the agency problem? We know that the agency problem means that the directors are owning in their own interest rather than the interests of the shareholders. So directors, when they're selfish and when they're just thinking about themselves and not the shareholders' interests, that is known as an agency problem. To encourage executive directors to operate in the best interests of the shareholders, they could be given a high basic salary, receive share options based on both individual and company's performance, be entitled to large payment, be asked to attend the AGM. So we have discussed this in the chapter. So it is B, receive share options, as it will serve as a financial motivator, and this will align the director's interest to those of the shareholders, right? Corporate social responsibility refers to play an active part in social life of the local neighborhood, to be sensitive to all stakeholders, alert to the social needs of all employees, act responsible in relation to shareholders' overall needs. Okay, so what is corporate social responsibility? We had discussed that CSR means we need to take the needs of all the stakeholders into consideration, not just the shareholders. So it is B. Which of the following would best explain the concept of sustainable development? So what was sustainable development? Sustainable development was meeting the needs of the present without compromising on the future generations. So it is B. What is the modern view on corporate social responsibility? It is a way to further a company's business and attract additional shareholders. It is necessary to reduce product liability claims. A company must give a part of profits to charity. Social responsibility is incompatible with the objective of maximizing shareholders' wealth. So it is obviously 142. The answer is A. Why? Because many customers are choosing to buy fair trade products. So we know that many customers, they would want to buy ethical goods and they would want to buy from a business whom they are aware that they are doing the business in a good manner, and shareholders would like to invest in such companies where they have a sort of social responsibility. So it is A. The agency problem refers to the fact that shareholders cannot legally be the directors of an organization. No, we just discussed what is an agency problem. It is when the directors act on their own interests instead of the interests of the shareholders. So 143 is false. Now we come to 144. Which of the following would render a non-executive director of a company less suitable for this post? The person worked for the company 6 years ago. The person has served as a non-executive for the last 6 years. The person has no previous contact with executive directors. The person who owns a number of companies' shares. Okay, so now let's first discuss. Owning the shares means it is creating a direct link. So if you know that somebody is already owning the shares, then they will take decisions and they will think in a biased manner because they are the owners of the company as well. So they will obviously think in a biased manner, right? So, in order for the non executive directors to be independent, we need to make sure that they do not own the shares of the company. Also, we need to note that the NEDs should not have worked for the company for the last 5 years. So, here 6 years ago is okay. If it was 5 years, then we would not consider them. But if it's 6 years, then it's okay. The person has served as an NED for last 6 years. So, what's wrong in that? See, if a person has served as an NED for more than 9 years, if they have served for more than 9 years, then we must not consider them also. After that, it was worth noting that non-independent NEDs can be chosen by the company as long as there is a majority of independent NEDs on the board. So the answer is obviously D. So now let's just keep this in our mind. Even this can come in the exam, that if a person has worked for the company for 5 years, then we cannot take them. If it's 6 years, we can take them. But in the last 5 years, if they have worked, then we cannot take them. And if someone was an NED in the past 9 years, for 9 years, then we can't take them also. But if it's 6 years, we can take them. Okay, what should an audit committee do? An audit committee should consist of independent and non-executive directors. Sorry, it should consist of independent non-executive directors only. Include at least one senior member. Include one member from the external. Carry out a detailed review of critical elements of the balance sheets. So we have realized that an audit committee should review the accounting policies and the financial financial statements as a whole to ensure that they are appropriate and balanced, right? Now tell me, if that's the definition of an audit committee, is this the answer or this the answer? I'm giving you a minute. Try to find the answer by yourself and then I'll discuss it. Have you thought of the answer? If yes, comment the answer down below and I will be replying to you whether the answer is A or the answer is D. I really want you to think and do it yourself. Okay, moving on. The most obvious means of achieving public oversight of corporate governance is via. So, what is one thing which the Public Oversight Board does? So, is it the company establishing a comprehensive website, publication of the annual report, press announcement, shareholders' access to the annual general meeting? So, the answer is obviously B. So, in the Public Oversight Board, we have to publicate the annual report so that people can check it. So, the answer is B. Within the UK, what is the usual purpose of codes of practice on corporate governance? Within the UK, what is the usual purpose of codes of practice on corporate governance? To establish legally binding requirements to which all companies must adhere, to set down detailed rules to regulate the ways in which companies may operate, to provide guidance on the best standards of best practice, to provide comprehensive framework. So, what is the answer? So, firstly, distractors A and B should have been eliminated. So, why are we supposed to eliminate A and B? First, let's think about that. So, references which are related to legally binding. See, we are talking about codes of practice and corporate governance, and that has nothing to do with something which is legally binding, right? So, detailed rules and legally binding, these are not the words which are used in the codes. Just keep that in mind. Codes are something which is individual in nature, and that has nothing to do with the factor of legally binding or the detailed rules and regulations. So, corporate governance is about ensuring standards are set at the highest levels of an organization. Codes of practice are usually associated with a principle based approach rather than a rules based approach. Are you able to understand? What we saw in A and B, that is something which is related to the corporate governance of ensuring, right? So, now what is the answer? The answer is C. It has the word guidance and standards of best practice. So codes are something which are not detailed and they don't have any sort of rules. That is just guidance on which codes we need to follow as a guidance. Guiding principles. Codes are guiding principles. So the answer is C. Which of the following types of committee is often temporary in nature and is formed to complete a particular task? Ad hoc committee, standing committee, executive committee, subcommittee. So the answer is A. Ad hoc means for the purpose, and the committee is likely to be disbanded as soon as the issue for which it was created was resolved. So the answer is A, which is the ad hoc committee. Which of the following would normally be included in the role of a committee chairman? Making administrative arrangements, dealing with correspondence, issuing the agenda, ensuring that correct procedures are followed. So, what the chairman does is maintaining the order. Maintaining the order in the meeting. So, one of the most important functions of a chairman is to ensure that order is being followed. So, what is the answer here? Correct procedures are followed. That is something which is looked at by the chairman. The duties of a committee secretary would include. Now, let's not get confused between the company secretary and the company chairman. So, secretary is someone who would make the timetable and everything. Chairman just focuses on the order in which everything is being done. The duties of the committee secretary would include making notes, issuing documents, fixing date, time, location, deciding who is to speak, fixing date, time, and location, making notes, issuing documents, and preparing minutes. Making notes, issuing documents, preparing minutes, maintaining order. So, this is where you eliminate option C. Why? Because maintaining order, that is something which is done by the chairman. Ascertaining the consensus view, even that is not done by the secretary. So the answer is A. B. Why is it not A? Because other duties of the committee secretary include preparing location, assisting the chair, and acting on the communication decisions. But deciding who is to speak has nothing to do with the committee secretary. As a requirement of the UK Corporate Governance Code, the Remuneration Committee determines the rates of pay grades. So, Remuneration Committee only decides the rates of pay. It does not decide the grades. I think that's kind of obvious. Tell me if I'm wrong. Let's read the question again and see where are we wrong. As a requirement of the UK Corporate Governance Code, the Remuneration Committee of a large company determines the rates of pay grades. Okay, so first of all, the Remuneration Committee is usually focused on directors' remuneration package. It does not examine the pay and grading of all employees, right? So here in the question, we have to focus on the word company staff. We did not see this properly. So the Remuneration Committee, wait, let me just remove this. Yeah, so the Remuneration Committee only looks at the directors. It looks at the directors alone, the pay of the directors. It has nothing to do with the pay of the employees or the pay of the company's staff. So both of them are incorrect. The answer is D. Committees typically make decisions more quickly than individuals as they create a larger pool of skills and knowledge. That's not true because they have a lot of knowledge, I agree, but then individuals make decisions more quickly, but then in a committee you are supposed to discuss with one another, so that it can be time consuming. So this is false. Committees may fail to recommend decisive action where needed due to the need of compromise. So, in a committee, compromise obviously happens, so that is true. Now, we come to law and regulation governing accountants. When submitting annual financial statements to be available for inspection by third parties, a company should send them to. So, if you've done this chapter properly, you know that for a third party to inspect, every company needs in the UK has to send it to the company's house, right? So, company's house deals with incorporation and dissolution on companies. It examines the company's information as per the Companies Act requirement. So, it is the company's house. The preparation and filing of accounts by companies each year is normally required by what? Codes of corporate governance, national legislation, international accounting standards, IFAC. So these are the kind of questions which might confuse you. So you need to read the question clearly. The preparation and filing of accounts. Who requires this? So the national legislation places a requirement on companies in respect of mandatory reports to the government and shareholders. This is to ensure that limited companies adhere to certain minimum standards. And codes of corporate governance are used to adopt principles based on guidance of corporate governance. So that is something else. We just saw that earlier. And what about the international accounting standards? The international accounting standards seek to achieve consistency in reporting across international frontiers. They affect the content and the presentation in the company account, and they make it and they help them prepare it. So it neither is it a guidance. This is something which requires filing of accounts each year. So that is done by the national legislation, requires this by every company. L Company has recently prepared its draft financial statements for the last financial year. It has been informed by its auditors that these financial statements are not true and fair. Which of the following would not have caused this? L failed to follow generally accepted practice. That is a reason. But what we need to find out here is what is not a reason. L's financial statements did not set out relevant information in sufficient detail. L failed to follow all appropriate accounting standards. L's financial statements contained minor error. So, companies' financial statements must be free from material error. This was what we had studied in the chapter, that the company's statements must be free from material error, but minor errors are something which cannot be avoided. So the answer is D. Okay, now we come to 157. FVF Company is a listed company in country N. Regulators have recently discovered that the company has failed to maintain proper accounting records, meaning that the financial statement in recent years have not been true and fair. So what are the consequences? Suspensions of FVF share by stock exchange, so that's true. Tax authority investigation into FVH, even that's true. So, what are the consequences if a company does not have a true and fair recording? So, they'll not be able to function in the stock exchange and tax authorities will investigate. What are the key aims? Okay, I'm giving you 2 minutes and I want you to solve 158, 159, and 160 by yourself. And I told you that these answers which I have marked, it might be true and it might not be true as well. So, take a minute. Okay, so what is the key aim of the IASB? So, what was the IASB? It was International Accounting Standards Board. And what is the aim of IASB, if you could recall? Improve the standards of financial reporting, develop worldwide auditing standards, develop a single set of high quality global accounting standards, represent UK interests effectively in financial reporting matters. So one thing which is clear that IASB had nothing to do with auditing or reporting. So the answer is C, right? Because IASB's aims are to develop a single set of high quality, understandable, enforceable, and global accounting standards and to cooperate with national accounting standards setters to achieve convergence in accounting standards around the world. Which of the following is the primary responsibility of the IFRS Interpretations Company? So, what was the responsibility of the Interpretation Committee? Advising the IASB on agenda decisions, review of newly identified accounting issues, and providing guidance. So, we know what the Interpretation Committee was. If you have done this chapter well, you already know that the answer is B, because A and D, which are there, informing the IASB and advising the IASB, that is something which is done by the IFRS Advisory Council, right? So the IFRS Advisory Council advises the IASB, wherein the IFRS IC, which is the Interpretation Committee, they deal with helping us if we're not able to understand something or if we are facing some accounting issues. So IFRE IC is somebody who helps us on a timely basis and gives us guidance on the accounting issues. Which of the following statements regarding UK accounting regulation are correct? The Financial Reporting Review Board is responsible for the creation of UK financial reporting standards. Okay. In the UK, statements of standard accounting practices have been largely replaced by IFRS. Okay. So first of all, the FRS in the UK are written by the ASB, if you remember that, and they largely replaced SSAP. Although any SSAPs which have not been replaced by an FRS will still be in force, right? So we know that in the UK, statements SSAPs have been replaced by FRS. The Financial Reporting Board is responsible for creating the FRS. That's not true. Why is it not true? We know that we have never studied something like that. So the answer is B, which is 2, where SSAPs have been replaced by the FRS. Now we come to the next chapter, which is the accounting and finance functions within business. In a very large company, managing the total level of working capital would probably be the responsibility of. So, who manages the working capital in a company? We know that it's the treasurer. A treasurer is a person who would be responsible for the debt strategy, currency management, banking forecasting, and risk management. So, all that is related to the working capital. So, whenever the question comes, who is responsible for the working capital management, it would be the treasury. Financial accountants usually produce information for organizations' external stakeholders. That's true. So we had studied that management accounting produces for the internal stakeholders and financial accounting is for the external stakeholders. There is no legal requirement for companies to have a management accounting function. So that is also true. So we had studied that management accounting is something which you can do if you really require it, even though it is advised that you need to have a management accountant, but then if it's not legally required. A is a small owner managed company employing 20 staff having a revenue of 3 lakh euro a year. It decided not to appoint external auditor to review its financial decision. Is in line with the requirements of current legislation, will be criticized by the governmental authorities, will allow the company to strengthen its financial controls. Okay, if you could recall, small companies do not have to be audited. As the company is owner managed, the agency problem will not be relevant, right? When there is a large company, then it is legally required to have an external audit. But if it's a small owner managed company, then it is in line with the current legislation. Which of the following would be classed as a book of prime entry? Bank statement, trial balance, journal, statement of P&L. So the books of prime entry included sales, payables ledger, cash and petty cash books, and the journals. So the answer is C, which is the journal. Gabriella is considering creating a financial accounting department within her business, but is unsure of what such a department would actually do. Which of the following would usually be prepared by a financial accounting department? Cost schedules, statement of cash flows, variance analysis, tax calculations. So, financial accountants would usually prepare the external financial statement, if you can recall that. And we know that the cost schedule, variance analysis, and tax calculation, all these three are related to the management accounting. Statement of cash flows is something which we show to the externals. So the answer is B. Angelo decided to record the purchases made on 2nd April 2000X in tax year ending 31st March 2000X. The authority will likely classify this tax as okay. So the purchases which we made on 2nd April, we are showing it in the year of 31st March 2000. That means we're showing it in the previous year itself. So what does that mean? Does it mean we're avoiding it? Does it mean we're minimizing it? Or does it mean we're evading it? So Angelo decided to record the purchases in the previous year. So the authorities will classify this as tax evasion. Why? This is a tax evasion as the company is illegally reducing its tax liability. So avoidance is something when you're not paying it at all, but evasion is something which you're paying it, but you're just showing it different in the other year. So the answer is evasion. Now let's come to see what tax mitigation is. Taking all legal steps to reduce one's tax liability, agreeing to pay a financial penalty, moving businesses and funds offshore, reducing tax liabilities without frustrating the lawmakers' intentions. So, tax avoidance is used to describe schemes which, whilst they are legal and designed to defeat the intention of the lawmakers. So, once a tax avoidance schemes become public knowledge, the lawmakers will usually change it. So, it is taking the legal steps only to reduce the liability. So, but then it does frustrate the lawmakers' intentions, right? So, it is designed to defeat the intentions of the lawmakers. But so the answer is A, which is to reduce the liability. An important advantage of using loans to finance investment. So loan interest is tax deductible. We have done this so many times. Loan interest is the only interest which is tax deductible. VDF company is planning to raise finance to fund the launch of a new product. It is planning to do this via an issue of new shares to the public. Which of the following is an issue that VDF may face? If it proceeds with plans to raise equity finance, it will be forced to pay higher dividends in the future. Even if the new product launch is a failure, that's not true. The share issue may dilute the control that existing shareholders have. VDF will require good quality assets. The issue of shares is likely to corporation tax liability. See, tax deductible interest is only from loans. So the answer of 170 is B. Working capital. So we know what working capital is. It is current assets minus current liability. Working capital is equal to current assets minus current liability, right? So working capital is the capital available to conduct the day-to-day operations, which is A. Which of the following statements regarding management accounting is correct? Budgets show the revenues and expenditure for the last accounting period. Budget is something which focuses on the future. So A is not correct. Cost schedules are often also referred to as standard cost cards. That is true. Cost schedules are also known as standard cost cards. We know that. Variance reports compare the original budgets to the revised budgets. Management accountants will usually be responsible for creation of the statement of financial position. No, it's created by the financial accountants. So budgets lay out the planned income and the expenditure for the coming report, first of all. And what are variance reports? Variance reports compare the actual results with the budget. So they don't compare with the original budgets to revised budgets. Variance reports compare the results with the budget. So the answer is B, which is cost schedules are also known as standard cost cards. Which of the following statements regarding integrated report is correct? They involve the merging of other financial statements to produce an overall view of the company performance. They are designed to show the organization's profitability. They include information on anything that is felt to be interest to the users of the financial statement. They include only relevant financial information for the users. So what was integrated reports? Integrated reports provide users with additional information on anything the organization feels that people will be interested in, like the social responsibility, environmental impact, sustainability, etc. So the financial integrated reports include information that is felt to be interest of the users, anything which we feel like the users will be interested to know. Which of the following is not one of the purposes of budgets? Responsibility for expenditure, motivation of employees, coordination of staff, costing of units. So which is not the purpose of budget? Costing of units. Why? Costing of units would be a purpose of cost schedule or standard cards. So the cost schedules which we were referring to, they would be something. These are also known as the standard cost cards. They would be requiring and they would be having a purpose of costing the units. That has nothing to do with budget. So the answer of this is D, because the question says not. Which of the following is not one of the capitals used in integrated reporting? Intellectual capital, environmental capital, natural capital, and human capital. So in order to answer this question, what were the 6 capitals in integrated reporting? They were financial capital, manufactured capital, intellectual capital, human capital, social capital, relationship, and natural capital. There was nothing as environmental capital, right? Intellectual was true, natural was true, human was true, but there was nothing like environmental capital. Daniel is trying to find certain key figures from the financial statements of HGF. He is unsure whether to look at the financial position, which is the balance sheet, or P&L, which is the statement of profit and loss. Net assets. Assets are always seen in the balance sheet, which is the statement of financial position. Gross profit would be seen in the P&L. So it will be in the SOPL, which is the statement of financial position. Now we come to the next chapter, which is financial systems and procedures. Victoria runs a business which sells computer equipment. She is concerned that when her business pays its suppliers, the wrong amount may be paid. Which of the following control measures could help her deal with this? So she is selling her computer equipment, but then she feels like people might pay the wrong amount. Regular purchase ledger reconciliation. Match the GRN to the original purchase price. Prompt recording of invoices received. Matching of the purchase order to the requisition order. We are talking about business pays its suppliers, wrong amount may be paid. So that is something which is dealing with the purchase. So when we keep reconciling the purchase ledger, then we can see if the correct record is there or the wrong record. And if there's a wrong record, we can reconcile it and make a new statement, right? So regular purchase ledger reconciliation would obviously help. JBB company manufactures and sells furniture, which is which it sells online and delivers to customers. JBB has recently faced a number of complaints from customers who have been sent the wrong style or color of furniture. So people have been ordering something, but we have been sending them the wrong stuff. So how can we work on it? Agree goods dispatch note to original order, match invoice to GDN, match orders sent to invoice raised, regular sales ledger reconciliation. So why are we not taking on the sales ledger reconciliation? Because that has something to deal with if we have charged the wrong amount of money. So when it comes to the price and money, that would be checked in the ledgers. But then if you want to see what we have sent, so that would be agree goods dispatched note and original order. So these two notes, if we compare, then we can get to know what we have actually sent. So the answer is A. Noah is considering introducing a number of control systems into his business. However, he is uncertain about what this would accomplish. Which of the following is not a purpose of organizational control system? Safeguarding of company's assets, prevention of errors, increased profitability, increased efficiency. Okay, so the answer is C. Why? Because control systems may, in a way, they might increase the profitability of the business, but it is indirectly linked to that. That's not the, what is the question again? It's not a purpose. Like, we are not making the control system just to increase profitability. We are making it to safeguard, to prevention, and to increased efficiency. So this is not a primary motive. So the answer is C. Which of the following would ensure that the sales cycle results in prompt payment? Orders are processed by qualified personnel, checking the goods are in inventory before dispatching them. Each item has its own code, checking the credit worthiness of the customer. So if you want that the sales payments are made promptly, we need to check the credit worthiness of the customer. So the answer is D. The most secure and the easy way to verify the payments to staff is sending company check, using BACS, paying people in cash, asking staff to visit the account. Okay, so BACS is an automated bank transfer. So it is very easy to trace that if something is going wrong, we can see it because nobody can make a fraud in it because it is a bank statement. To add security to the process, checks issued for a large amount of money will often involve. So whenever you have check which are issued for a large amount of money, we need at least 2 signatories. Let's see how many questions are left. Okay. We'll need 2 signatories. Consider the following statements. When petty cash is replenished, it is usual for the amount of cash to drawn to equal the value of the receipts and vouchers which are produced since the previous replenishment. That's true. It would be best practice for a company that predominantly receives checks and postal orders in payment of goods dispatch designated. No, that's not true. Trusted individual, that is not true. Postal, I've not read anything like that so far. So the answer of 183 is only A. Why? Because usual procedures of individual responsible for petty cash is to present the receipts and vouchers for replenishment two people should open the post and list the contents, right? They said only one trusted individual, but we need at least two people for trustworthiness. So the answer is A. Reducing the incidence of fraud is primarily an issue of reducing the incidence of fraud. So having organizational control. So the motive and the primary reason why we have an organizational control is to reduce the fraud. Which of the following is an advantage of manual systems? They have fewer errors, they are easier to audit, they are easier to correct, they are more secure, right? So the answer is C, which means that in manual systems we can easily put a whitener where and when required and just correct it. But in automated systems we need to check the formulas and erase the formulas and everything. XCX is a business which leaves relatively small amounts of money to a wide range of individuals and other businesses. Its systems are currently largely manual, but it is planning to purchase a new computer system that will store all client records, calculate repayments, and identify overdue accounts. Which of the following statements is correct regarding the comparison between XCX manual and automated systems? It will be easier to restrict data access to only authorized personnel with XCX current manual system. No. XCX new automated system is likely to be more accurate with its repayment calculation than the current system. Risk of failure, nothing like that. Unlikely to, even that's not true. So the answer is B. Now we have the relationship of accounting with other business. E company has a large marketing department. In which of the following ways would the department coordinate with E's accounting department? Decisions on the quantity of raw materials, marketing has nothing to do with that. Establishing credit terms for customers, marketing has nothing to do with that. Calculating pay rises for staff, marketing has nothing to do with that. Decisions on the selling price. So that's kind of obvious that the answer is D. Which of the following is not a way in which organization's production department would coordinate with accounting department? Not a way. Calculating charge out rates for the services, calculating the budgets for the number of units to be produced, estimation of the cost, decisions on quality of raw materials. So option A would be related to the services department, or it would be related to the marketing department, right? Charge out rates would be something which would be determined by them. Charge out rates would not be determined by the production department. So the answer is A. Which of the following is a feature of services provided by an organization? Permanence, innovation, variability, separability. It is variability. If it was inseparability, I would say that was the answer. The answer is variability. HGF is a company that operates taxis within several cities. Let's first read the question. What aspect of nature is they referring to? Okay, it's obviously inseparability. Why? Because we cannot separate the drivers from the, we can't separate the business from the drivers from the taxi. So that is inseparable. So auditing and financial control. What comes to your mind when you think about auditing and financial control? I hope you can recall all that. The key purpose of internal auditing is to detect errors and fraud, evaluate the organization's risk management and systems of control, give confidence as to the truth and fairness of the financial statement, express an internal opinion on the truth and fairness. So the internal audit also makes recommendations for the achievement of the organization's goals and objectives, whereas what we can see in C is the role of the external auditor, right, which is giving the confidence as to truth and fairness of the financial statements. So what is the key purpose of internal auditing? So the key purpose of internal auditing is to evaluate the organization's risk management processes and systems of control. Internal check is defined to ensuring that no single task is executed from start to finish only by one person, providing reasonable assurance about the achievement of the organization's objective. So, when we're talking about internal check, then it is only one, which is ensuring that not one person is doing the entire task. The second one is something which is related to the internal control. Internal auditors have an unavoidable dash problem as they report to those whose activities they are reporting on. They have an independence problem, right? It is considered to be best practice for internal auditors of a large company to report directly to the board of directors, external auditors, shareholders, or the audit committee. So, internal auditors in a big company must report to the audit committee. Which of the two following points are correct with regards to internal and external audit? Emma is preparing a seminar for the board of directors of the company she works for regarding internal and external audit and differences between the two. Which two of the following points are correct with regards to internal and external audit? The scope of the internal auditor's work is determined by the management of the company, while external auditors determine the scope of their own work. Internal auditors test the organization's underlying transactions, while external auditors test the operations. That's literally the opposite. Internal audit and external audit are usually both legal requirements. That's not true. Internal auditors can be employees of the company they audit, while external auditors might not be. So the answer is A and D. Consider the following statements. There is a greater flexibility in how internal audit work is done relative to external audit work, since external audit work is controlled by law and audit standards. To practice as an internal auditor, the person must be a qualified accountant. That's not true. So the answer is only A. The fact that managers are not aware of problems of a company facing, such as not knowing that a major incident of fraud has recently taken place, would weaken which of the following components of internal controls? Control environment, risk assessment process, control activities, or monitoring of controls. So, control environment refers to the overall attitude of managers. So, control environment is something which refers to the attitude of the management. So, the answer is control environment. A retail company operates a transaction processing system TPS. Which component of internal control would this be a part of? Risk assessment process, monitoring of control, control environment, information system. A TPS is always related to the information systems. The primary purpose of the segregation of duties between individuals within the organizations is to locate and identify frauds that employees have perpetrated. That's not the first or the primary reason to do so. General computer controls include physical controls to prevent unauthorized access to computer equipment such as door locks and cards. So, segregation of roles may happen to identify frauds, but that's not the primary role. So, the answer is B, 2 only. Jana is the payables clerk in a large manufacturing organization. One of her duties is to write up the purchase ledger, but she is not authorized to make payments to suppliers. This is an example of a general principle, segregation of duty, right? So, what is this? There is a segregation of duty which is essential. Mark is preparing a receivables ledger reconciliation to check for any errors or fraud that may have occurred in the month. What type of control is this? So this is something which is related to basically the correcting or detecting the frauds which have already occurred. So reconciliations check for errors or frauds that have already occurred. So they are detective in nature. So after you identify the problem, if you start working and dealing with it, then it is called as a corrective measure. But then first, when it's already done, if you're checking it, that is known as a detective measure. Lucas is entering customer details onto a computer system. The system requires him to log in and check that he is allowed to enter customer details. The system also checks that he has entered all the required information about the customer. These customers' computer systems will not ensure completeness, authorization, validity, and identification. So validity means checking if the data is valid or not. Other things, all this the data computer can check, but it can't check if it's valid or not, right? How does it know if it's valid or not? Which two of the following are examples of general controls within IT system? Physical, such as protection against power sources; logical, such as password systems; forensic, such as an audit trails for all of them. So for 203, the answer is only A and B. Which of the following would be most likely to be classified as a preventive control? Having a supervisor present, conducting regular receivable statement reconciliation, year-end inventory check, establishing procedures for irrecoverable. So we're talking about something preventive, something which has not occurred yet. To prevent that, it is A. Responsibility for the internal controls is shared between management and the internal auditors. It's only done by the internal auditors. See, remember that it is management's responsibility to ensure that the organization has proper accounting records. This would involve the company having internal controls. It's the responsibility is always with the management only. The internal auditor's role often includes helping to set corporate objectives and the design and monitoring of performance measures. So 2 is correct, right? So the answer is B. We're left with four questions. Which of the following statements are correct with regards to an external audit? Due to their in-depth examination of the business, external auditors are often able to provide advice to management on possible improvements to the business. Do you think that an audit, what is correct with regards with an external audit? So first thing, statement 2 is incorrect. Why? External auditors often have an independence problem. That's not true. The internal auditors have that problem. And what is wrong in the statement 4? External auditors have little or no interest in the control, and as these are responsible, even that's not true. External audits can help to resolve management disputes such as disagreements, computer valuation due to in-depth. So the answer of 206 is A. Every evening, the last person leaving the office needs to switch on the security alarm. So what is that? That is something which is related to physical things. Controls that are fully automated and are designed to ensure that the data input in the system is complete and accurate. Something which is complete and accurate. So that is known as the application controls. Why? Because this is the definition itself, that controls which are automated to ensure that the data is complete and accurate, that is an application control. External auditors have no interest in the internal controls of the organization that they are auditing. That's not true. If an organization's internal controls are strong, it will reduce the amount of substances testing that an external auditor will undertake. So that's it for this video. In the next part, which is the part 4, I believe, we'll be completing the 5 more chapters. I hope you're able to understand this exam kit. I have linked the playlists of the chapter explanations as well as the playlist of the study kit in the description box below. Thank you.